Lehman Brothers was a major player in finance. Once a titan of Wall Street, Lehman Brothers' demise sent shockwaves throughout the financial world, triggering the most significant financial crisis since the Great Depression. But what are the deep causes of their downfall that has it considered as one of the major triggers of the global financial crisis in the year 2008? Join us as we delve into the intricate web of events that led to the end of this once mighty institution. From risky investments to regulatory oversights, the story of Lehman Brothers is a cautionary tale of greed, hubris, and systematic failure. The story begins in the bustling streets of Montgomery, Alabama in the mid-1800s. It was here that three ambitious brothers, Henry, Emmanuel, and Mayer Lehman, laid the foundation for what would become one of the most influential financial institutions of its time. Originally hailing from Germany, the Lehman Brothers immigrated to the United States in search of opportunity and fortune. Drawing on their entrepreneurial spirit and keen business acumen, they initially entered the cotton trade, capitalizing on the booming industry of the Deep South. Yet, just like any other businessman in the world, they wanted to expand. Ironically, it was their foresight and adaptability that set them apart. Recognizing the shifting tides of commerce, the Lehman Brothers then established a successful dry goods store, catering to the needs of the local community. And they were successful. As the winds of change swept across the nation, the Lehman Brothers once again seized an opportunity for expansion. With the dawn of a new era in finance, they transitioned their focus into investment banking, a decision that would forever alter the course of their legacy. With a strategic move to establish an office in New York City in 1858, Lehman Brothers positioned itself at the epicenter of American finance, laying the groundwork for its ascent in the world of investment banking. What's more exciting is, it didn't take long for Lehman Brothers to make its mark on Wall Street. With a keen eye for rising opportunities and a liking for strategic partnerships, the firm swiftly rose through the ranks, earning a reputation for excellence and integrity. From financing ambitious infrastructure projects like railways and bridges to facilitating corporate mergers that reshaped entire industries, Lehman Brothers played a very important role in driving the engine of progress forward. But it was in 1994 that Lehman Brothers truly solidified its position as a titan of Wall Street. With its highly anticipated initial public offering, or IPO, the firm catapulted into the spotlight, attracting investors from around the globe. Despite their newfound success, for the third time, Lehman Brothers again embarked on a bold new frontier, aggressively expanding their foothold in the complex world of mortgage-backed securities and derivatives, which later on became the worst nightmare of the company. Led by the visionary Dick Fuld, the firm pursued a growth strategy that would ultimately propel it to their now-made name in Wall Street. Dick Fuld's strategy at Lehman Brothers was marked by aggressive expansion and a heavy reliance on risky investments, particularly in mortgage-backed securities and derivatives. Under his leadership, Lehman pursued profit at all costs, often prioritizing short-term gains over long-term stability. At this point, Fuld is at the highest level of greed. While Fuld's leadership was lauded for its ambition and tenacity, it also attracted scrutiny and criticism, particularly in the wake of the firm's catastrophic collapse. At this time, everybody is questioning Dick Fuld's leadership, which is why until now, he was the one to blame for the historic downfall of Lehman Brothers, though he says he is not sorry. As the 2008 global financial crisis approached, Lehman Brothers faced a dire situation. Years of risky investments and borrowing too much money had put the firm in a risky spot, especially knowing that Dick Fuld's strategy is to avoid long-term stability. Fuld's failure to adequately assess and mitigate risks left Lehman dangerously exposed when the housing market collapsed in 2008. Lehman Brothers was in big trouble. In September of the same year, the firm made history as it filed for bankruptcy, sending shockwaves rippling through global markets and economies. The once mighty institution, a symbol of Wall Street's power and prestige, had fallen, leaving devastation in its wake. The Lehman Brothers collapse was felt far and wide, triggering a domino effect that reverberated across financial institutions, markets, and economies worldwide. The 2008 financial crisis had officially begun, plunging the world into the depths of economic turmoil. As Lehman Brothers soared to great heights with its bold move into mortgage-backed securities and derivatives, trouble loomed ahead. Accusations of accounting fraud and risky lending practices started to surface, casting doubt on the firm's reputation and success. These challenges possessed a threat to Lehman's standing in the financial world, jeopardizing its stability and future prospects, if there was any. At the heart of Lehman Brothers' downfall lay its deep entanglement in the subprime mortgage market, a high-stakes gamble that would ultimately prove to be its undoing. When the subprime mortgage crisis hit with full force, Lehman Brothers was swept up in the turmoil. The firm's fate became intertwined with the housing market's downward spiral, leading to its downfall, a downfall everyone saw coming. The failure of two Bear Stearns hedge funds, coupled with Lehman Brothers' own exposure to toxic assets, spelled disaster for the firm. With its balance sheet hemorrhaging red ink and investor confidence waning, Lehman Brothers stood on the brink of collapse, and there was no getting up. In all the confusion and doubt, people wondered, what caused Lehman Brothers to fail? Simply put, Lehman Brothers collapsed because 1. It took too many risks. 2. It didn't watch things closely enough. 3. It didn't realize how risky it was to dive into the subprime mortgage market. Indeed, the downfall of Lehman Brothers reminds us that it's up to us to heed the warnings of history and strive for a financial system that serves the needs of society as a whole rather than the interests of a select few. Whether it's advocating for regulatory reforms, promoting financial literacy, or supporting initiatives that promote economic justice, each of us has a role to play in shaping the future of finance.